80 people will move into Columbus every day, 365 days a year.
Hey everybody, Jaime Barlow with Sell for 1%. I'm here with Jaime Barlow, my brother, and Rich Cercone with Equitable Mortgage, here to talk interest rates, Fed meetings, what's coming, and what cannot be stopped. Rich, what is happening out there? What are you seeing in the market?
Well, the market is chugging along pretty much the same vein as we've seen here lately. The Fed met in Jacksonville, Wyoming last week, and they had a lot to say about, keeping things pretty much on schedule with what they're doing now. They definitely didn't telegraph any date for a rate decrease or to stop raising rates. They leave open the option to continue to raise rates, and they will do it pretty much data dependent on what they see. And it seemed to appear that they feel that rates will need to be increased again at least one more time before they stop completely. So the market didn't really like that much, but after they digested a little bit further, at least the mortgage-backed securities and the 10-year Treasury improved at the beginning of the week. So as of Monday, we saw a little bit of the positive reaction in interest rates. And I think it's just that everybody feels we're kind of coming to the end of the cycle, possibly. So, we had improvement in interest rates here this week so far. Today, we had something called core PCE, which I think is personal consumption expenditures. That was on target with what they expected, slightly higher than what it was last month, slightly higher than it was a year ago, but net expectations. So the market is I'm looking at the market right now, it's kind of rallying on that news. And so, I think all in all, we probably are getting near the end of rate increases, but then again, we've got a lot of macro economic and political forces that are beyond our control that could change things one way or the other. I hear COVID is coming back, for instance. So who knows what that means?
Well, that would be great for everybody. In the market, at least, if I remember correctly, the first round of COVID really helped people out, it seemed.
Yeah. I don't know if they can keep printing money or not, but if they can do that, it would definitely help interest rates.
Yeah, and that's why COVID had that impact, is because they kept things stimulated and printed however many trillions of dollars as a result of lockdowns. The thing that I missed about COVID the most, yes, and the thing I missed about, and I don't know, that's kind of like synonymous, right? If you lower the rate, you're printing money. That's what, right. That's why when you raise the rate, we're retracting the money from the economy, and that's where the stated goal, and like Rich is saying, they've been kind of telegraphing there's going to probably be one more rate hike, and then we're going to let it sit and see what next year looks like, and so then we'll see what the data looks like next year, and we got elections coming up. It's interesting times for sure, but with the market and like COVID. If rates stay up, then, we were looking at showing times nationwide stats on, it follows about 3 or 4 years on a chart with showing traffic. And you can see mid-August and every year follows the same trend. But this year, about mid-August, it dropped. And that breaks a trend compared to the last year's. And I think what you're seeing is the interest rate increases. And so, what we're telling our sellers is the simple truth is buyers have to reconcile what their new home payment is when they're getting quoted at 7.5 or 8.1 or whatever the case may be. And so, eventually it's going to become the new normal. And all the buyers who are entering the market as a new buyer, well, they don't really know any different. They're stepping into this world where this is what the payments are. But someone who's been looking for 6 months, all of a sudden you get priced out I think that
Right.
Rich is seeing that with, mortgage applications. I think Jamie and me are seeing that with our showing traffic being decreased. It does feel like we got a little bit of traction in the market over the last 6-7 days. All of a sudden, my listings started popping again. But we're having to pull out a lot of tricks. We're doing open houses, we're doing price reductions, we're doing things that we haven't had to do in 3 or 4 years, it seems like.
Right.
And so it's definitely shifting, and you can feel it coming. But I think the death of the market is also greatly exaggerated. There still are buyers, there still are sellers, things are still moving. It's not totally log jammed.
In terms of Columbus, my wife was reading an article this morning as I was sitting here at my desk, and she said the projection is that 80 people will move into Columbus every day, 365 days a year for the next, I forget how many years she said, 20 years or so. So, we're adding 80 people a day that, well, that's not, those are families, but we're adding that demand into the Columbus market.
Right.
So anybody that thinks that price of houses is going to plummet, I don't think that's going to happen. Well, we'll need a place to live. Shelter was one of those things.
Right. The economic base here as well. It's almost as if Columbus is turning into a mini Silicon Valley with the Intel chip that will be the largest chip manufacturer. And then you got Google, Meta, Facebook, data banks all around, all the hospitals going up. It's just, the economic base here, I think, is bullish for Columbus. But anytime you hit 6, 7, 8, possibly 9% interest rates, it's a psychological level. Rich, do you think we'd ever see 10% before this hike stops?
I don't think we're going to get to 10%. I mean, of course, that's all speculation, but in this cycle, I think we're towards the end, and we peaked, and we're in the 7s. I don't see us going up to 10. But again, the macroeconomic and political forces that could drive anything are beyond anyone's control or anyone's predictions. There was a point when I thought, holy crap, we're going to 10, but I don't think so at this point.
Right. Yeah, I would agree. I've had the same thought, Rich. It was like at a certain point, it's like it's going to go to the moon and it's not going to stop. But with where things are at right now, I agree. And if it's going to get like that, Jamie, I think, and I'm somebody who thinks there's going to be some kind of a correction. I mean, I am Chicken Little. I am on the same side as everybody who says, oh yeah, market's going to crash. And part of me does think that, but then, what Rich is talking about, and Jamie with the economic base, 80 people coming here a day, there's not really much for sale. And so there's going to be a major issue where we get to 10, 15% rates. And it's going to be something insane, like the world de-dollarizes, they come off the petro. It'll be something unforeseen, a massive flood in China. Yeah, exactly. So I don't think that it's going to be like 2008 where it comes from within housing and that, causes a housing crisis. But there could be a macro black swan event that, pops the whole bubble. But the bubble is all of the assets. And so, nobody should be rooting for that. We should be rooting for a way to figure this out and come out the other side with somewhat normal circumstances. And it does seem like we're on our way to that. I didn't think they could pull off the soft landing, and I wouldn't say this is soft. We're coming in hot, but I do think they're going to get this bird down, and we're going to land this sucker. And so, we'll see what happens, but Columbus, Ohio, not a bad time to buy.
Definitely an interesting spot in Columbus as well, with Realtor.com announcing Gahanna, Ohio, #1 hottest zip code in the entire United States at a $350,000 median list price. Which is still very affordable for a lot of out-of-market buyers, maybe looking from New York or Chicago to move to Columbus. I mean, that's a big house compared to what you're used to when you're moving in. And again, macro aside, zooming out, prices of homes since what? The inception of keeping records of prices of homes in the U.S. has gone up when you zoom out. So it will be interesting to see what happens on the macro level.
Right.
Yeah, I mean, I guess we can, tie it all together. with if you are an investor from out of town, if you are a buyer from out of town, call Jamie, call Rich. We can get you into Gahanna, but we also know the next areas that are on the come up, and you can get there and enjoy all the future appreciation that's coming because of the things that Jamie and Rich are talking about with the growth coming. And if you're in the area and you need to cash out that equity, it's a great time to do it. The market is not collapsed. You come on priced right, professional photos, our targeted marketing, and you're going to save 2-3% off the top on commissions. And I've got one I'm selling right now. There's no buyer agent at all. They're saving 5%. You're not going to find a deal like that. So keep more money in your pocket. Call Rich, 614-314-2666, or call us at 614-451-6616. For Rich Cercone at Equitable and Jamie and Jaysen, the Bash Brother Barlows, thank you for watching. Have a great week. We'll see you next time.
Thank you.
Thanks, Rich.